Dear Minister Al-Wazir, when you're on the move, two things matter. One is direction, the other is speed. You provided the direction and you set the stages for the speed. So we're all set and we're looking forward what is going to happen. Let me now, ladies and gentlemen, welcome Carsten Kengeter. Carsten Kengeter is the head, a CEO of Deutsche Börse since June 2015. He's, amongst others, a guest professor at the London School of Economics. Before that, he was at the UBS, member of the executive board, as well as chairman and CEO of the UBS Investment Bank. Before, from 1997 to 2008, he was partner at Goldman Sachs. He will start today's session with Professor Dr. Uwe Stegemann. We have a dialogue, a format which we felt very appropriate for the challenging topics. Professor Uwe Stegemann is a senior partner at McKinsey & Company and advises banks and companies since 22 years around the globe. Before he joined McKinsey, he was working for banks in Germany, Luxembourg, as well as the United States. He studied in Cologne, as well as at the HEC, the École des Hautes Études Commerciales in Paris, and the National University in Singapore and Pennsylvania State University. Gentlemen, I'm very much looking forward to your conversation. The floor is yours.
Thank you very much for the kind introduction. It's an honor to be here. It's a pleasure having the opportunity to talk to Carsten Kengeter one day after his first shareholders meeting held here in Frankfurt. Congratulations to a good shareholders meeting. How did it feel?
Well, you're always a little bit nervous with these things, but I think it was overall a very good opportunity to also present a few items around this topic, which makes it into the press quite a lot these days, the merger proposal with London Stock Exchange. So a good event overall.
Wonderful. So that brings us exactly to the topic. It was your first shareholder meeting in Frankfurt. Was it the last? Are you on the move?
The merger with the LSE is going okay. So we are making all our preparatory document preparations and are trying to hit all the submission timelines for all the authorities, of course. So we are hopeful that this merger is going through. But as you note from the structure of the merger, while there is a holding company that's needed to be established in order to materialize and manifest the stock exchange process between the two companies, the dual headquarter structure of Frankfurt and London is a firm and important element of the overall structure.
So let's maybe dive a bit deeper into this. I think it's on all of our mind. What does it actually mean? What does the merger mean for your company? Let's start with your company first.
Well, I think our company is a facilitator and an infrastructure provider to markets. I think one of the topics today is going to be how to improve those markets for Europe and how to improve those markets for growth in Europe. We have 2/3 of the EU's GDP bound in SMEs, 2/3 of all the EU jobs bound in SMEs. Those SMEs have traditionally been very, very focused on bank financing and not have been able to access capital markets. So I think one of the objectives that we need to fulfill, which will also have an effect on our company, how do we fuse the cash markets, the pre-IPO markets, the financing markets overall between the two companies in order to make the very limited capital that Europe has as a function of many developments in the past, Generationenvertrag, non-funded pensions, etc., etc. How do we make this limited capital go round more quickly? So we have a number of plans to assist in our role, which is to fulfill a sovereign, semi-sovereign, and broader mandate, and that is what we think we can do much, much, much better with the two liquidity pools of Frankfurt and London being joined up.
So you're saying this has a tremendous benefit, not only for Deutsche Börse as a company, but for the funding situation across the continent?
I think so Deutsche Börse as a company is, if I'm responsible obviously for the company vis-a-vis the shareholders as well as all the other stakeholders. So if you want me to start with the shareholders, then clearly growth is important for any company because it creates the dynamism and the lifeblood of how the company will develop in the future. That growth has been minimal at Deutsche Börse for a number of years. We need to engender it again because you have seen a lot of growth both in Asian competitors as well as North American competitors. The Capital Markets Union plan by the European Commission, which I understand is welcomed by many national governments across the EU as well, is an important concept, but it's a concept. We must be putting some facts and structure in place for that concept to be, to take life. And I think in that vein, we would be serving our shareholders because they want the growth, they want the development, they want our company to be competitive on a global scale because this business is about global competition.
Great, and we'll talk about this in a bit more detail, what contributions this combined entity can make for the funding structure across Europe. There were, at the end, a few also critical voices yesterday.
Not only at the end.
Not only at the end. I guess you're still upbeat, but what do you think are the most justified critical voices? What are the things that your company, that you still need to address in order to respond to these critical voices?
Well, I think we're trying to have an open dialogue with all the people who are supporting this, as well as the people who are perhaps in need of further explanation and therefore have critique to express. So there is a vast number of industry leaders, both in Germany and external to Germany, who are proponents of this merger proposal because they see the benefit in it. There is, I think, many of the supervisors and authorities that we report to in our function to increase and enhance systemic stability, I think see this as a potentially positive step to helping systemic stability. At the same time, we have to address the very important, I think, balance between what is Frankfurt as the gateway to Europe's strongest and largest economy with between 40 and 50% of EU GDP at any given moment, versus London as the world's largest, most active, and most asset-rich capital market. So I think this is not a question of either or, and that's what's being sort of touted. This is a question of both and. That is how we will be accessing the capital that Germany and outside Germany is needed for important topics like digitization. PricewaterhouseCoopers, for example, predicts that over the coming years, German industry, as a function of the Industrie 4.0 initiative, needs about 40 billion euros per annum of capital to make itself future-proof. So I think the minister was mentioning digitization a number of times. These are the types of things that we need to provide explanations to, that this is helped and how it is helped by having both one leg in Frankfurt, very close to the, I think, leading Eurozone financial regulation and stability center around the Bundesbank, the ECB, and related, and another leg in London where there is a lot of liquidity and capital going around.
I think you're touching upon one of the areas of discussion yesterday, London versus Frankfurt. Help us understand, do we here in Frankfurt need to be concerned? You talked about the two legs. Are those equally strong legs going forward, or are we bending over a little bit?
Yeah. Well, people that try to tell me that I should appeal more to the heart, which I'm trying to do. And I'm really I always go, when I appeal to the heart, I think it's very good to appeal to the heart via business logic, because that is a rational thing to do.
Anatomically, it's on the left-hand side, which is east. Yeah, is that?
So that's already a good start, isn't it? What I'm saying here is the post-trade area. So if you take an exchange business, you have pre-trade, which is index and data. You've got the whole trading thing, which is where the trading platforms operate. You've got the post-trade area, which is about clearing and safe custody, safekeeping, and other services, collateral management, and so on. The value chain has been shifting in terms of the P&L of these companies into the post-trade arena and into the pre-trade arena, out of the trade arena. So if you go to post-trade, you look at Clearstream Banking Frankfurt, you look at Eurex Clearing AG, and related institutions that are under the Deutsche Börse group. Those benefit greatly from the access to Bundesbank and ECB, and that proximity is what London needs. Right now, the European project is in crisis because we are looking at the 23rd of June as a potential exit date for the UK. I think personally it will turn out to be a cathartic moment for the EU, because we will be confronted with all our evil spirits at this time, and we will be looking at something that is a very positive moment where we realize if you want to have a community that is based on common values, with which the EU is, you need an economy to pay for it. And we've been making it pretty difficult across the fragmentation of the EU to have agglomeration of capital, to have therefore more efficient capital, and have the mechanisms in place. So what we're doing with this is, and I'm coming back to your point, you've got Frankfurt as a post-trade hub, if you want to use that sort of modern word. London as an established trading center. I mean, today, for years and years and years, 85% of the liquidity trading on Eurex as a derivatives exchange, the third biggest derivatives exchange on the planet, is trading in London. So there's no change. However, with this construct that we're planning, we're pulling liquidity from our partners into our post-trade systems in the Eurozone. I don't think there's any risk of the UK joining the Eurozone anytime soon. So there will be a lot of business and gravitation in that vein coming from London to Frankfurt, and we are benefiting from the access to capital in London.
So it sounds like the cake for Frankfurt is going to be bigger.
I think the cake will expand because there is more volume that will be able to be used in the ECB proximate type of businesses that we run.
Yeah. So there's a long talk about the growth prospects, the benefits, and Mr. Faber yesterday elaborated also on the new compensation system, and I learned that you have significant also financial investment, obviously, in the company, in the growth case. Now talking about the second big controversial topic, the Brexit, what will that do to your strategy, to the benefits that we were talking about for the European markets for Frankfurt, and what does it do to the value of the deal and the value of the company?
In my career, I have learned that we are all beta dependent much more than alpha. We'd like to think that we are alpha generators, but that is, not that often so true.
Lots of asset managers around here.
So I think it's quite important to remember that the cohesion and efficient working of a European Union will be probably by far the biggest factor for economic growth going forward. So the UK staying in the EU and taking an active role in the shaping of the EU is very, very important and is the preferred case. Herr Al-Wazir mentioned astutely that Frankfurt would benefit, of course, if there were a migration happening as a result of a Brexit. That is probably true. I think we are overall decreasing the cake, though. We are making ourselves perhaps better at the expense of the overall picture, and that is never a good idea.
Yeah. Good. So I've tortured you now with the deal and the value of the deal. Let's maybe talk a little bit about the substance of the strategy. I think we all need to see your strategy in the context of Capital Markets Union. And I think the whole goal of Capital Markets Union is the more efficient allocation of capital.
Yeah.
So do you see a significant funding gap across Europe, maybe also particularly here in Germany with regards to the access of SMEs to funding sources?
Well, if you look at how markets are structured across the world, you've got the United States or North America in general, where there is a 70 to 80% capital markets dependency of corporate financing versus the opposite picture here in Europe. In Europe, if you only have the large preponderance of market access into bank-intermediated funding, then especially in the post-regulatory intervention world, post-crisis, that creates an issue of choice. And it also creates an issue of kind of being able to channel at the right time for growth financing, because banks, as we know, are restricting and constraining their balance sheets, and therefore it is not a good growth supporting picture that we see for Europe. So I think that, in addition to the relative paucity of asset agglomeration across Europe, in addition to the fragmentation of European markets, there are 120 equity trading sites in Europe. I mean, I don't need to say anything more. If you add those factors up, you are putting Europe at a structural disadvantage, and therefore I very much welcome the growth initiative of the European Union to look at this capital markets union. But as I say, it needs structural support. It's a great concept, and I think the objectives are good. But if we don't have market infrastructure to support it, then it's going to remain a concept and will not become reality.
Mm-hmm, mm-hmm. So what role does Capital Market Union play in your strategy? Or in other words, how does your strategy respond to this European desire to increase the volume of available capital, the diversity of capital and funding sources? Will you offer additional products, additional services to support the idea of Capital Market Union?
So I think it's all a little bit linked also to our merger proposal, if I may sort of bring that back in. There is a lot of work that has been done by policymakers and regulators post-crisis, which is helping the structure of competition and the structure of efficient markets going forward in Europe. So, for example, MiFID II, with its transparency, liquidity, best execution rules, is, while it is commonly deemed by market actors as another regulatory burden, it's actually a regulatory advancement. And that regulatory advancement can only be captured if you link marketplaces. So, for example, you've got the cash markets in Europe. They are organized in general by the exchanges that run them on a hub and spokes principle. So you've got a center, and there are microwave lines and connections into various access-seeking traders. The low latency ones are basically sort of the HFT type traders, and then a gradation of users of those lines. It is much better to have a cluster of those centers connected amongst each other with again, individual microwave lines to make membership in one hub, therefore immediately accessible to the other hub as well. We are not at the advanced stage of spiritual maturity, I guess, to do this without mergers and economic tie-ups. But that is where we need to go in order to give Capital Markets Union life, and that is very central to our strategy as well. We do need to be a provider. So we are now number 4 in the world. We used to be number 1, and the guy who's 3 is more than 2 times bigger than us. So it's obvious where the route of the route goes. So this has to be central to our strategy, and with this, symbiotically, we provide help to the Capital Markets Union project.
So conceptually, I think that sounds appealing. If I was a classical German SME, depending 90% on bank financing today, could you promise me any tangible benefits going forward? Would I benefit from what Deutsche Börse has to offer going forward?
So right now we have a couple of market segments. Frau Stars is with us today as well here, who is in charge of the cash markets of Deutsche Börse. We've got a couple of market segments catering especially to SMEs. However, it is perhaps much easier to provide both pre-IPO and also secondary liquidity based on the liquidity bridges that we have in mind following a merger with the LSE, if that is permitted to go ahead. Right now, we are doing growth financing via our Deutsche Börse Venture Network, which has roughly 200 members in aggregate. We are a bit more. We are doing then pre-IPO work in terms of education of SMEs so that they actually can look at other ways of financing and how to prepare for that. And then we have, as I said, 2 specific market segments within our trading markets. So what we would have in mind together with the LSE is to link especially the pre-IPO Deutsche Börse Venture Network and Elite, as well as those secondary cash markets. There is obviously Frankfurter Wertpapierbörse and Xetra system. There is Turquoise, AIM, and other systems on the LSE side. If they can be efficiently and effectively linked, and basically MiFID II, which is likely to come into full effect in 2018, although it's a little bit, the timeline is being reviewed right now. If we can link a regulatory advancement like MiFID II in terms of helping investment managers to execute on a transparent best execution basis, true best execution, because you have visibility synoptically across so many more trading platforms. If you have a one access point that links via connected cluster into more trading places.
Mm-hmm. Trying to listen to you carefully, would it be an unfair statement if I said it sounds like it is a bit more focused to the fintechs, to the fast-growing technology companies, as opposed to the classical German Mittelstand?
No. So we do have this fintech initiative that the minister mentioned a moment ago here in Frankfurt, which we're very happy that this evolves and can be part of and folded into the overall initiative that Frankfurt Main Finance is pushing forward. But if you look at Deutsche Börse Venture Network, the vast majority there are not fintech companies, for example. If you look at our entry-level standard market segments, the vast majority have nothing to do with fintech. Okay. So it's and I think that is good because the European SME market is extremely diverse, as we know.
Right.
This is both geographically, of course, but also sectorally.
We're almost getting to a close here. Do you want to say a few words about the derivatives markets as well?
Well, derivatives markets for a former derivatives trader is always a difficult topic in today's world. So it's not something that people like to talk about anymore. But the fact is that derivatives are important instruments for hedging and the appreciation of risk as long as the model doesn't take over the reality of pricing. So if models become too complicated, if they are path dependent or two-factor or something that is not immediately accessible via a simple spreadsheet, I think then it becomes a little bit difficult. And therefore, there is correct intervention from the regulatory authorities into those markets. But no one, the insurance industry, for example, wouldn't either want a simple option not to exist anymore. And an option is a derivative, and we have been very proud of those products in the insurance and many traditional markets for a very long time. So I think we will be continuing to make markets and derivatives, and importantly, make a clearing proposition much more valuable in derivatives. That is where a lot of banks' capital is buried right now. They must, to follow the rules and comply with the rules, comply with very high margin requirements against their derivatives portfolios. And I think it is in the interest of growth for Europe and the EU to alleviate some of that pressure by proper risk-managed systems of clearing which allow systemic stability to grow, but also growth to be financed both via banks and the capital markets.
Thank you. It seems like you are on a very exciting journey. We talked about a number of nuts that you obviously still have to crack. But in general, sounds like you're upbeat.
Well, I think it's much easier to not, when you're not sleeping, to be upbeat. I think you have to be looking at this optimistically and positively, because it is, right? We are doing something that is very important for Germany, for the UK, for Europe, and the world, because I think the US would not benefit from not having a better capital markets access point via a larger player in Europe. The US would not benefit from having one of their financial infrastructure companies, of which they've got two very large ones, dominate the European market infrastructure. And I'm not in politics, but if I were, I wouldn't want the indirectness of access to be able to not be able to call someone in Europe to inform myself about how the markets are operating right now at any given moment in time, especially in times of crisis. So I think we're doing something very positive and very instructive and helpful for European growth, and that's why I have every reason to be optimistic.
Sounds very encouraging. Mr. Kengeter, thank you very much for sharing your thoughts. Don't know if there's...